You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block, everyone's favorite, I know it's my favorite, bi-weekly source for all things options related. My name is Mark Longo from theoptionsinsider.com, as well as from a little thing we like to call the old Options Insider Radio Network. If I sound a little out of breath, because I was racing around the studio getting a few things done right before that music finished, so glad I can make it perfectly timed. And where, of course, can you find all the 400 plus episodes of the Option Block? Well, no shortage of places, listeners, including the mothership, theoptionsinsider.com. Surf on over there, click on the Insider Radio Network tab, and you're off to the races. All 13 programs opening up there for you, including a lot of our cool interviews from RMC and FIA. More of those still to come, so stay tuned for those, listeners, if you like those, as well as, of course, all of the archived episodes of the Option Block and every other program, I should say, on the old network. And joining me on the said network, on said show today, starting off with the man, let's go in order of perhaps the least snow today, because certainly it ain't Chicago. Let's try the hinterlands of Maine, where we are joined by none other than the Rock Lobster himself, Mr. Andrew Giovinazzi. Andrew, I mocked you mercilessly on recent shows for saying, hey, winter's over here, it's 73 degrees. Well, not so much today when it's like 30 and we have like 5 inches of snow. So there you go.
You know what happens when you start talking like that? It's going to come back to you like that. I'm just saying, you are in the Midwest. But this morning, it was a brisk 9 degrees. It's now 40 degrees higher, actually, than it was this morning. 9, not 19, not 29, 9.
I think I poked the bear when I actually posted a picture on my Facebook of hey, it's grilling season. Grilling season has returned. And I'm not joking. No sooner did those grills hit the steak, or the steak hit the grill in this case, I'm backwards all over the place today, that the sky darkened and snow started coming. It must have, if it wasn't instantaneous, it was within a few seconds. So I clearly offended the grilling and seasonal gods in this case.
Yeah, you did. You might as well have just, you lobbed a bomb at them and they lobbed it.
So everyone who's shoveling out in the Chicagoland area today and cursing and shaking their hands at the heavens, just blame it on me. It was all my doing. All right. And also joining us a little bit closer to home, beaming in from Casa Jacobson today. You know him, you love him as the Viceroy, Mr. Alex Jacobson from Options Express by Charles Schwab. Mr. Viceroy, welcome back to the program. And what hat are you wearing for us today, sir?
I am wearing the snow removal hat. I had an 8 a.m. appointment in Evanston, and give you a sense of this, I live in Deerfield. It was about a 95-minute drive to get from here to Evanston this morning. And then coming back was about a 2-hour drive. And the drive wasn't so bad because of road conditions. It was difficult because of all the cars just in ditch. It's like they had never seen snow before. It's like there's a 500,000 people who moved into the greater Chicago area in the last week.
I don't know, but but it's grilling season now. So you take the snow tires off, you're past all that snow driving mentality. You don't need that anymore.
Remember when we used to have studded snow tires and you had to have them off by April 1st and you would take them off on like March 26th and a foot of snow on the 27th. It was like the snow gods knew.
I was just joking with someone the other day. I was like, oh, who would actually still do snow tires in this day and age? What an antiquated and outdated concept. And apparently whoever still has those on these days is having the last laugh at our expense. Speaking of the last laugh, he's not known for laughing too much on the show, but he often comes on last. He's got stuff to do going on over there at RCM Wealth Advisors. Mr. Uncle Mike Tosaw. Uncle Mike, welcome back to the program, sir.
Always good to be here, and I feel bad for you guys now that it's 85 and sunny out here in the mountainous regions of St. Charles here today. So I see all the pictures of 5 minutes from here that has the 5 inches of snow, but not in St. Charles. We're all sipping our drinks by the pool again today.
That's when you're really feeling the benefits of that bubble out there, that enclave that is St. Charles.
Yep, that's true. Us and Tom Skilling, we control the weather.
All right. Now that we're done with the regional weather recap, listeners, we're going to dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, listeners, welcome to the trading block. If you don't know the drill by now, this is, of course, a portion of the program where we break down what was wet and wild and woolly on the old street today. And the reason we spent so much time on snow at the top of the show, listeners, is there wasn't a hell of a lot else really cooking on the old street. Most of the major indices pretty much unched up fractionally, down fractionally. In the case of the S&P, almost quite literally unched off 1/10 of a point. So there you go. And of course, VIX Cash also unched. Not really getting a lot of that weekend back. They took off on Friday. It's kind of just sitting there. Not really a heck of a lot going on, really across the board. That said, there were some pockets of interest, some flares of compelling activity, and it's our job to find them, listeners. So away we go, starting perhaps going reverse of the other way, going back to Uncle Mike land. We talked last week, Uncle Mike, about Apple. Perhaps it's in the boring realm these days. It's in the Dow now, kind of a staid thing, kind of an old-timey, stodgy name. But it's blown the doors off everything today, up yet another 1.2%. So I guess we can throw that out the window, huh? It's not boring time in Apple land yet.
I don't think it'll be boring in Apple for a little while yet. But you see Apple, it's up 1%, just kind of going through the list of the stocks in the Dow today. IBM had a little bit of an update today. McDonald's had a little bit of an update today. But for the most part, we're really not looking at anything of any great significance along the blue chips. One thing that I do find just kind of concerning about this market, don't get me wrong, I'm still a bull, but I'm going to say my thing right now, so get ready, listeners, to get annoyed. There's never been a better time in the history of the entire stock market to sell than right now. We are near all-time highs right now, and so on Friday, just kind of going into the close, I made a decision that if we weren't going to make or beat the highs of the Fed day on Wednesday, then I was going to sell some short calls against our long option positions as well as our long stock positions. And so far, it's obviously not been a huge deal. We haven't really had a lot of movement. But I do want to caution in that we need to if we want to have a serious rally in this market, we need to break through the all-time highs, and we did not do that last week.
So you're talking selling calls in SPY or in Apple or perhaps both?
Just SPY. Come on, selling calls in Apple.
I
was crazy. Everyone from Apple, all the executives of Apple who have no idea who I am, called me and reprimanded me for doing such a thing. They said they were gonna. Well, I'm not even gonna tell you what they said they were gonna do because they didn't really call me. But anyway. Selling some calls in SPY for right now. I sold actually an April 212 call. and I set up as a call spread in some of our for our strategic night our hedge strategic night portfolio. But for right now, until we can break the new all-time highs, I think that we need to be a little bit more cautious in any way that you can right now.
We know your track record here on the show of announcing your call rights, because second you do that, we're off to that strike and beyond. So let's see if that materializes here in the S&P.
I kind of hope it does.
The way it did in Apple. What was your strike, 119?
I had 120, and
120,
so thank God I was able to roll my way out of that one, but that's kind of how we're doing it.
Only a few percentage points off there, because it's easy to do that on Apple when it moves 1.5% a day. It's kind of easy to miss that mark by a few percentage
points. Now, real
points.
quick, one thing in terms of my call writing on SPY so far this year, whenever I have written a call of 211 or greater in 2015, that trade, I mean, it's an overall part of an overall bullish trade, but just that specific call right, I'm undefeated on that one so far this year. And not that I want to be undefeated on that, because that's a bearish trade as part of a hedge. But my point is that at these levels, we've come down every time. So when we've come up to around these levels in the last 3 months, we have come down.
There we go. That's the exception. It's going to be, I should say, the exception that proves the rule, sir, as we rally to 2130 and beyond.
We're going to do it.
All right.
I thought Mike made a good point about that. Didn't you? Don't you think him not getting those highs is that the market is now discounting or fully discounting or starting to fully discount, partially, whatever, like the rate impact. Rates, they're taking the rates out of the market. Aren't going to rally anymore on the Fed stuff. The market's got to do its own thing. And I think that's, not seeing a high next week after they came out with that language, which is about as dovish as they could have come up with, and still say they're going to raise rates a whole 25 basis points or whatever it's going to be. But I don't know. I thought that was, I agree with Mike. The fact that we couldn't kind of giddy up and go. I think we're taking rates out of the picture as far as that is not going to be a cause for rally anymore. Those blistering upside rallies that we had in, let's say, 2012, 13, 14. I don't think we're going to get them this year. I got to say. So doesn't mean we can't go up, but we're not ripping the shorts' faces off.
So you agree with Mike? So you're right in the 212s and SPY as well, just blasting them out?
I'm not selling calls, but I think, strategically selling the put spreads I kind of like, I got to say.
Are you also on board with the XLE, what was it, 30 puts that we were blasting out last episode? I mean, we got a lot of those going too, so it's going to be all sorts of crazy strangles we're working here. Short upside and SPY, short downside and XLE. There's some correlation there. We'll work it out here.
One of the two's got to work.
Yes, one of them. One of them's got to work.
They can't both not work.
See,
what the heck?
The famous investing style. One of the two has to work.
I'm going to buy Google and Apple. One of the two has to work.
All right, Mr. Viceroy, save us from this madness. What caught your eye in today's activity, if anything?
I have very little to add. I think the one of the two has to work is the next adage that Wall Street will live by. There's the Buffett trade, there's the Tosaw call sell, and now there's the one of the two has to work. Not as we've all pointed out, not a lot going on today. Today was one of those days. I'll give you a little peek inside OX. Today was one of those days that you were glad to have a futures business, because there's a lot of activity in FX and in interest rates. And one of my standard arcane pieces of trivia, the United States 10-year now yields 10 times what the German 10-year yields. German 10-year is yielding about 1.9%, about 0.19%, and the American 10-year, our 10-year, is yielding 1.9%. But stocks were quiet. I mean, biotech sold off a little bit today. Facebook is bumping the 85 level. That actually gets a lot of kind of two-sided play at OX. We have a lot of people with both the stock and options positions, and that 85 number has been one of those kind of psychological hurdles. But every $5 in Facebook has been a psychological hurdle. So we'll see if we can take this one out, but quiet today except on the future side.
Since we're talking international, I was looking at an interesting piece out of Bloomberg over the past week. They were comparing, we like to look at, obviously, talk a lot about SPY. We were just talking about SPY options a few minutes ago. We don't talk all the time about how it compares to a lot of other esoteric indices out there, including Bloomberg compared it to their own in-house Bloomberg Dollar Spot Index. If you're not familiar with that, it tracks the dollar versus the 10 other major currencies, the euro, et cetera. That's been off about 2.25% since last week at least. So the dollar, of course, taking it on the chin of late. But people started noticing even last week, and that's what the piece cited, that the options on the ETF that tracks this, the Power Share Dollar Index Fund, the puts on those came about. The options out there were the highest, implied vol at least was the highest since 2008. I think they did it specifically compared to the cost, not even pure implied vol, but the cost of the options on this ETF were compared to the S&P, were nearly 1-to-1, 0.91 versus the S&P. They talk about hedging, but they don't mention in the article here a specific strike. So if they're looking at downside puts versus in the S&P versus downside puts in this. This is a bullish ETF fund, so that got something to do with it as well. But still, that is the highest ratio of price of these options since 2008. And that was back on March 18th. And it actually, since then, has increased to 0.95. So a lot of people back a week ago were starting to speculate, saying, hey, what's going on out here in currency realm? People are really starting to pay up for some of these options out here. What does that translate to? Are people really looking for a big move? It seems a little bit overdone. Fast forward a week, and not really overdone at all, because the dollar is just taking it on the chin, to use the technical term. So perhaps the people paying up for those options were a wee bit savvy. We don't ever actually do a lot of currency ETF unusual activity here on the old show. Maybe perhaps, Andrew, it's time for us to start adding that to our rotation. What do you say?
I don't think it's a bad idea. The one thing I saw, we came up in our chat a couple weeks ago, was the UUP, which I guess is the just the realized vol on that. The implied vol was trading at like a 50% discount to the realized vol. It's like it was the cheapest options on the planet last week. So definitely, it got my attention when I saw how cheap that stuff is and how much the UUP is moving. So I say go for it.
Andrew?
Yeah.
I don't know if you're going to do this in the odd block, but you saw that big put trade in the vol ETF?
UVXY?
Yeah.
We did. We profiled that last week.
Yeah, that was from last week, I believe.
What do you make of that? It just the natural erosion in it, or do you think
we have clients that do calculate the potential erosion, and that's the 9 handle is like one of the strikes, that one of those inflection point strikes where, you wait a year and a half and the UVXY should be down around 70 or 80%, which would, just kind of being a normal year, which would get you down there and make that put worth something. So that's what it looked like to me. Just somebody did that calculation, and I've seen that. We saw trades like that go up last year in VXX when they were buying the Jan 2016s. Normally when we're seeing higher prices and for volatility, we saw those out of the money put buyers, and they just wait a year, and then sure enough, that you got a collapse of 50, 60, 70% in the product, and those puts all of a sudden look pretty smart.
For listeners who are not familiar with what Alex is talking about, it was 105,462 of the UVXY Jan 2017. So a bit of a ways out there. 9 puts going up, paper buying for $5.10. If you want to hear our interesting discussion of this, Andrew and I actually discussed it at some length last week on another program on the network, the Options Oddities program. If you like what we do here on this show, listeners, particularly the unusual activity, you really should be checking out that show. Andrew does a lot of great stuff on that show, and I chime in every now and then, once a week or so, with some highlights, and we had that episode last week on our Friday spectacular edition of the program, so check it out. Went up in one massive block. It was crazy paper, and certainly worthy of a listen if you're interested at all in that sort of activity. Speaking of unusual activity, it's that time of the show, listeners. It's time for us to keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, that funky tune means it is time once again for the Odd Block, the portion of the program where we break down the weird, the wild, sometimes just head-scratching paper we're seeing going up, like that crazy UVXY put buy that went up last week. And if you like that kind of stuff, we got some more set for you here today, kicking things off with good old straight up more put buying, at least, so that's keeping the theme consistent. Going to start things off here in Neustar Inc, ticker symbol NSR. Closing today at $22 even. Don't see that very often, so that in and of itself merits some unusual consideration. This is the name that does about 1,700 or so contracts a day, doing about 5,000 today, which is interesting. A lot of paper going up, and as I mentioned, puts were where the action was today, about 1.6 puts over calls out here. And what in particular caught our eye, we have to scroll on down to the July expiration cycle to find these, and if you do that as well, listeners, you'll see it jump right out of you, because not a heck of a lot of other paper going up out here in July. In particular, it was the July 19 puts that caught our eye. Paper gobbling up a huge block, at least relative for this name, of 1,900 of those puts for $1.30. Open interest is non-existent, 23 contracts, so it's all open in paper. They went out $1.10 at $1.35. A few more scattered, about a dozen or so went up afterwards, but pretty much all of it went up in one block. They do have earnings in April. This will certainly cover that. There was not specifically an earnings play. If you were here looking at earnings, you would probably go a little bit closer to home, probably in the May time frame. Our friend positioning out here in July means he's looking for something a little bit beyond that. Either way, kind of interesting stuff. A bit out of the money, but it does have a bit of the hallmarks. No stock went up with this trade, but it has the hallmarks of perhaps somebody who's sitting on a wee bit of stock and perhaps maybe has a little bit of concern going forward. And he says, the 19 handle or so and no farther. This is where I draw the line in the sand. Mr. Rock Lobster, let's kick it off in the Odd Block here. What's your take on someone gobbling up a wee bit of NSR puts?
Yeah, I did some more research on this company. This is like the cheapest company ever. Like trades at a 7 PE. Stock is down from $35 this year for the high. I mean, some telecom company does something. I don't even know what the deal is, but yes, I think somebody is drawing a line in the sand. It kind of feels like a put in stock type play, although we did see no stock go up. So that is pure speculation on my part, but I mean, the low of the year for the name was 2032, and you're buying the 19 puts in July. Unless the company goes bankrupt when it's got a huge earnings stream. So I would guess it would be sort of a defensive play, but that's how I take that. All I saw, I didn't see any stocks. I can only speculate.
That's what we like to do here on the old program. You're right. It does seem like there's stock in that equation somewhere, whether they went up with it elsewhere or they already had it, wherever the case may be. It does seem like there's stock as part of that component. Call us crazy, listeners, but we've been doing this a while, and sometimes it just seems like there should be stock there when there isn't always immediately evident on the trade. Moving on to a name. We haven't talked about this one in a while either. This is moving on to the gaming side of the fence, not the fun shoot, bang, bang video gaming that Andrew loves so much, but no, more of the roll them dice type of gaming with Caesars Entertainment Corp, ticker symbol CZR, closing today $9.62. This is a name that does about 4,400 contracts a day, doing about 15,000 today. So lighting it up city out here in Caesars, about nearly 6-to-1 calls over puts. That'll tell you where the love was today out here in Caesars. In the case of Caesars, it wasn't just one strike that caught our eye. No, it was actually a combination of two, which would necessitate perhaps a spread, listeners. What caught our eye was started off with about actually 5,000 total, so 5,000 of the March 10 calls going up. Looked like paper selling, followed with the April 10 calls going up 5,000 times, paper buying. About 5,500 contracts open on the March 10 strike, so it looks like our friend here perhaps reestablishing, closing out a long that needed a little bit more time to breathe in the weekly marches and rolling them out to the April weeklies instead. Not buying himself a hell of a lot of time here, just buying himself a week, but apparently interested in doing it nonetheless, and doing it on perhaps a little bit of a ratio, closing out about 5,200 total on the March 10s, and then putting up 6,600 on the April 10, so perhaps a little bit more optimistic out in April. 2 contracts open on the April side of the fence, so all opening paper there. There also was a little bit of a flurry in the April weeklies as well, perhaps related, perhaps not, of about 1,500 of the April 8.5 puts going up as well. We don't have those in our write-up on the site, listeners, but it's interesting paper. It could be correlated. We've seen people buying calls and financing with puts before. It would not be the first time doing it, again, on a weird ratio if they are related. I mean, the 15 cents by 25 on those puts. These options, doing 6,000 of them for around 40 cents. A little bit of a weird ratio, but we've seen weirder things going up out here in the odd block. Mr. Rock Lobster, I will turn it over to you now. What's your take on our friend going through a lot of effort to buy himself another week here in Caesars?
You know, that's the thing. You know, like the love your broker trade? Don't you feel this has some love your broker?
Yeah, I was going to say it. I didn't want to offend our friend, but this has all the hallmarks of a. Yeah, I'm doing a lot of Sturm and Drang for not much really here.
You know, I think isn't Caesars going through bankruptcy somehow? I believe there's like a creditor fight. I mean, there's that big open interest on the March calls. I'm assuming they're rolling, but only thing I could think of, it has to be tied to a settlement. But, you know, the vol's pretty high in there. That's the only thing I can think of. Maybe they thought the settlement would happen March this week, and maybe it's next week. So to me, it's either I love my broker or it's definitely try to play on some sort of reorg in Caesars.
Yeah, they filed Chapter 11 back in January, and so our friend perhaps could really be into the timing of when they're coming out of this. Seems a little quick, but it could be, or maybe there's some other development on that front that our friend here believes he is privy to. About the puts, you think those puts are tied for a little bit of financing here?
Possibly. I mean, because they did it on less of a ratio, which means, you know, there's probably some risk. I mean, that's a whole different trade if you buy the April 10s calls and then you sell the puts at 15 cents against it. So
go big or go home, baby.
Exactly. That's a different bite of the apple, so to speak. That's a bigger bite.
Hey, our friend knows when this thing's going up, sir. So he's not afraid of blasting out some puts.
Exactly. So that was my take on that. It's feeling a little timing related.
So if you're one of those out there listeners who thinks the unusual activity perhaps is prescient, perhaps predicts something to come in this underlying, then someone's going through a heck of a lot of effort to say something's cooking in the next couple of weeks or so out here in good old Caesars. So, and they're going through a lot of effort to add a week to their calendar. So bear that in mind, all of you out there playing the home game. Maybe we will file this under the very near term to be watched category. See if we do get a little bit of pop out there in Caesars, in which case our friend out here maybe not as crazy as he initially let on. Meanwhile, we're going to move on to our final name here in the old odd block, listeners. This is a newcomer as far as I'm concerned. Of course, Mr. Andrew, maybe we snuck one or two in here that I didn't see, but it is possible. All things are possible here on the old program. But I'm going to go this being a newcomer, a new initiate, a novice, if you will, to the odd block segment. This is ENSCO PLC, ticker symbol ESV. Trading today, closing right around $21 even, a couple cents off of that. This is the name that does about 5,000 contracts a day, doing a whopping 25,000 today. So, Andrew, if we were playing Guess the Sizzle It'd be over 5x, I would think. And what we saw in particular, what caught our eye, you can see 22,000 puts, 2,700 calls. That should tell you where the action was today out here. 8-1 puts over calls. And once again, we have to scroll on down, this time to the June expiration cycle to find this activity. And I'm sure listeners, when you listen after the fact here, you'll be able to find it pretty quickly as well, because not a heck of a lot of open interest going on out here in ESV. In particular, of this size, we saw 10,000 of the June 1620 put spreads going up, paper buying for 95 cents. It's like someone did what it appears on the surface. Someone just came in and just wanted some straight up downside here from the 20 handle to the 16 handle and did it 10,000 times and was willing to pay about $1 for the privilege of that protection. About 3,400 open on the 20s, pretty much only a couple hundred open on the 16. So this is clearly opening paper. An interesting one nonetheless. This went up on two mega blocks essentially on the Philly. This is getting close to, pull up a chart here, getting close to the nadir here, the trough for ESV. So an interesting time to be gobbling up on some puts, but our friend here, not convinced that we're at the bottom, that there perhaps is more to come, or is at least deathly afraid of it. Mr. Rock Lobster, take us home with this pretty sizable put spread here in ESV.
This particular put spread here, I think they always try to nail the low. So they're going to buy the 20s, sell the 16s, looking for small dollar put spread. And it's just like another one of those where it feels like there should be some stock with it somewhere, because basically they think we try to go all the way down into the hole, I think. So as far as I can tell, that's what that customer at least is looking for. I mean, they kind of structured it, that short put right around the bottom that ESV hit when everybody was kind of panicking in the oil market. So, it's definitely looking for, you can't say it, but it's looking for lower prices.
Certainly sounds like that is the case. So there you have it, listeners. 3 names for your listening and perhaps trading pleasure in the old odd block. And now it's time for us to keep on rolling right on into the Express Block.
The Express Block, brought to you by Options Express by Charles Schwab. Options Express by Charles Schwab lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources. Options Express by Charles Schwab is the online broker for all traders. Best of all, Options Express by Charles Schwab lets you trade stocks, options, and futures all in a single account on powerful yet easy-use trading platforms, including mobile devices. Visit optionsexpress.com for your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, you guys know the drill by now. At least I hope you do. This is, of course, the Express Block, the portion of the program where the Viceroy puts on his fancy hat, and if we're lucky, perhaps a fine timepiece, and takes us behind the scenes into the realm, the hinterlands known as Options Express by Charles Schwab. Maybe a little bit of client education, maybe a little bit of some client trading, some client activity, maybe a little bit of what's going on the platform, maybe a little bit of some new tech coming your way, maybe a little bit of all of the above. We never know when we go on these tours. So, Mr. Viceroy, I hope your fancy hat is donned. And where should our tour take us today, sir?
So the tour should take you to the OX website, and a concept and service I've talked about before in the past, the virtual trade account. And some people might want to think of this as a paper trading account, but one comment I want to make today, and that's to the Schwab customers who have maybe traded equities but haven't traded stocks. The OX virtual trade account, come to optionsexpress.com, open a virtual trade account, doesn't cost anything. We are going to gather some information from you, and obviously we're going to market to you and ask you to open a real account. But the OX virtual trade account lets you trade options, stocks, ETFs, and futures. It doesn't have the full functionality of the OX site, but it does have features like trailing stops, contingent stops. And if you're new to the industry or you're a stock trader who wants to paper trade options or you're a stock trader who wants to paper trade futures or any sort of variant thereof, real cool way to do it. Obviously, no risk. If you run out of money, you actually get to refund the account. There's actually have the ability to put more money in the account. I just thought of a real cute line, but I won't do it. But it's a very neat tool. There are a handful of them available in the industry, but it's kind of a really great way to learn. I had a question last week from a listener who wanted to fund their virtual account with $1 million, which at this level we don't allow in the account, although you can refund it. But it was sort of an interesting question. I know I've talked about it on a couple shows, but it's a great way to learn. And I think when you look at the option pros, especially the four of us on the show here today, yeah, we all had lots of formal education, but a lot of what we learned ourselves. We learned through experience. We learned through trading. We learned through, as much as I hate to admit it, making mistakes. And what a great way to learn and what a great way to make a mistake by simulated trading or paper trading. Come to optionsexpress.com. You'll see a solicitation to open a virtual account, and you can paper trade or virtual trade to your heart's content.
When I first thought, when you said they don't have some of the functionality like walk limit in the paper trading accounts, was, oh, that's a shame. But then I started thinking about it, and that'd be a difficult thing to replicate in a virtual environment, because you're essentially getting fills or not getting fills. You'd have to somehow virtually say you're filled here or you're not filled here, and then try to replicate that for the end user. That would be a cool thing. It's a ridiculous technological hurdle. I don't think anyone expects it, but it would be a cool thing to try to replicate in a paper trading account, because then they could get really the full suite of functionality of OX.
Yeah, and we've talked about that, and to your point, it's very hard to do. We have virtual customers. The virtual trade account, to your point, Mark, isn't as robust as the real account. And we get customers, and I hear from listeners and people who will go up on OX Social who will complain about the virtual trade. People will say, the stock sat at my limit for 10 minutes and I didn't get filled. And one of the things in virtual trade is, unlike the real account, you've got to refresh it. And of course, we reach out and say, would you please refresh? Your fill is there. But it's a great way to learn. No matter how much functionality it has, it will never replicate the real account. But think about it. We get questions on the show all the time, and we do a few questions every week. And the underlying tone of many questions is, how do I learn? Do I read a book? Do I get a mentor? Do I pay for a class? Do I get a piece of software? The answer is yes. Yeah, people will learn at different rates and in different ways. But what a great way to learn through a virtual account.
Yeah, it's something we've been recommending here for a long time. OX and pretty much all the major brokers offer pretty robust, not complete for the most part, like things like walk limit are kind of impossible to replicate in that sense, but you get a pretty good overview of the platform. You get to kick the tires quite a bit, and hey, you don't lose anything. And hey, maybe you call up Alex and he gives you $1 million fake OX bucks to play with. So there you go. Check it out, listeners. Surf on over to optionsexpress.com to try it out for yourself. And now it's time for us to keep on rolling right on into the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, listeners, you know what that music means. It's Monday. That means it's time for Uncle Mike to put on his fanciest of smoking jackets, even though he doesn't really smoke except for the bubble pipe. Grab his stone tablet, sit down, and certainly, day like today, a roaring fire would be acceptable, brandy snifter in hand, to dispense some options, wit, and or wisdom. And I was checking with my birdies before the show. That's why I was so out of breath, listeners. And they were whispering in my ear, squawking, if you will, something about tax time, tax season. And when it's that time of year, people are thinking retirement accounts, and the inevitable bevy of questions comes in about IRAs. What can I do? What can't I do with options? Can I do naked 1/7 ratio iron condor swaps in my IRA account? So Uncle Mike, please The floor is yours, sir. Take us away. Give us some IRA-oriented education, please, sir.
I will do my best. A couple things I want to go through with the IRAs today. Most of the time for IRAs, in terms of what's allowed in an IRA through your broker, is not necessarily, it's easier to explain what's not allowed than what is allowed in terms of options. On the security side of it, it's very typical that everything for option trading is allowed, with the exception of selling stock short, selling naked options, and trading stock on margin. Now, let me define naked options before we go any further. Let's say XYZ stock is at $10. You can still sell the $10 put. However, the maintenance requirement is going to be all $10 times 100, of course. It's not going to be the 20 to 25% of the underlying in the formula that is given in the margin account. That's very typical. But in an IRA, it's going to be a cash secured put. And there's a difference between a cash secured put and a naked put. Naked calls are typically not allowed, or I don't know anywhere where they are allowed in an IRA. On the future side of it, pretty much anything is allowed, assuming that you get a trustee. But that is something that is kind of on the discretion of each individual broker. Now, what I want to go through today, and I've talked in the show how I've done things within IRAs with the simulated index concept, with how you can use options in an IRA. I love options in an IRA. I'd say a vast majority of my clients' money is in IRAs. But with that being said, I want to talk to you today about the difference between a traditional and a Roth IRA. Now, this is an age-old question, and it seems to me, just through my years in the business, it's a lot like religion and politics. Everyone seems to have their own opinion on it, and you really can't sway one person one way or another. So with that being said, first off, in the Tosaw household, we have both traditionals and Roths between my wife and myself. I think that there's a place for both of them. Now, first off, let me tell you what the difference is between the two of them. I like to refer to it jokingly as the coming or going rule. The federal government's going to, the IRS or federal government, whatever way you want to look at it, they're either going to get you coming or they're going to get you going. Let's say that you contribute to a traditional IRA. All the money that you contribute is going to be tax deductible in the year with which you contributed, assuming you qualify for it. Meaning that you're not participating in a retirement plan at work, i.e. a 401k. And if you're not, then you can deduct your full contribution. If you are participating in a retirement plan at work, then you can still contribute to an IRA, but it's not a deduction. The benefit of the IRA is that you can put X amount of dollars. Let's say I put $100 into my traditional IRA, and the money grows and grows and grows, and then that $100 becomes $200. Well, assuming that I am over age 59 and a half, I can take that $200 out, and I had not been taxed on it until I take that distribution. At that stage, when I'm 60 years old, let's say, that $200 that I take out is going to be taxed at the income as ordinary income at whatever my current income tax rate is. Now, with that being said, let's look at a Roth IRA. With the traditional IRA, that's when they get you going, so to speak. With the Roth IRA, they get you coming. Let's say that I contribute $100 to a Roth IRA. It is not a deduction at all. There's limits to what you can contribute to it. But let's say that $100 grows and grows and grows and grows, and then you take the money out when you're 60 years old. Same rules, you're not allowed to take money out until you're 59 and a half. There are exceptions, and you can take it out with a 10% penalty. There's exceptions for hardships education. I don't want to get into that right now, but the general concept as to why you would take it, why you set up an IRA or a Roth is for retirement money. When you're 59 and a half with a Roth, you pay no taxes on it. So in theory, that $100 could turn into $10 million, and you'll never pay taxes on it ever again if it's in a Roth IRA. Now, with all that being said, most people from who I've run into in the marketplace are more partial to a Roth IRA. Like I said, I think both of them have a place in your portfolio. Now, let me explain why. Let's say, for example, that you give money to your church, or you pay property taxes, or you have a mortgage. Interest on a mortgage is tax deductible. Giving money to your church is tax deductible, and paying your property taxes is income tax deductible. So with that being said, let's say that you do some careful financial planning and you know that you're going to need X amount of dollars when you turn 60 the rest of your life to do one of those three things. And there's a lot of other things that are deductible, but those are the three basics that a lot of people do. But let's just take away mortgage. Let's say you've paid off your house. Now, once again, another thing with religion and politics is if you want to talk to someone about whether they should pay off their house or not, some people say you should, some people say you shouldn't. It's like religion and politics again. I think that it just kind of depends upon your individual situation personally. Now, let's say that I have my $100 and I want to turn my $100 into $200. I get a deduction when I put my $100 into my traditional IRA. When I take my $200 out when I'm 60, let's say that I use that money to go buy a new hat. Well, if that's the case, I'm going to have to pay taxes on the money when I take it out. However, if I have that money, that $200, and I want to give it to my church or use it to pay my property taxes, if that's the case, then I get to deduct that because it's a deduction on my income tax. Now, there's a little more to it than that, but I think that there is a place for traditional IRAs just for that reason alone, because you need to have some money that you know you're going to have some deductions when you're older. That's why when I go work this out with my clients, I recommend that they have a certain percentage of money in a traditional for that specific reason. How much is the right amount? That varies with every individual client, but I think that's definitely something to look at. Now, let's compare the Roth IRA to the traditional in terms of which is better. Let's assume that I'm going to get $100 as my income from work, and I'm just going to put all of it into an IRA. Now, I know people make more money than that, hopefully, but just to make it an easy comparison. Scenario one, I earn $100 and I put it into a traditional IRA, and I get my money, I go out and I hunt, or I get my food, I go out and I hunt and I camp. So that's how I survive, but I make $100 as my annual salary, and I'm just going to put all of it into an IRA. By doing that, it's totally deductible. And what's going to happen with that $100, I'll pay no taxes on it. Now, let's assume a constant tax rate of 25% for easy math. The money grows and grows, and when I take that money out, when I am 60, I will have the $200. It's taxed at 25%. I have $150 to go buy my hat. Okay? Now, let's go with scenario two. 25% tax rate for all of eternity, and that $100 that I make, I put into a Roth IRA. Whoa, wait a second. I got to pay taxes on it first. Well, I have to pay a 25% tax rate, and I'm only able to put $75 into my Roth IRA. So with that money growing and growing at the same rate, we'll assume the money doubles by the time I'm 60, I will have $150 in my Roth IRA instead of $200. Well, that doesn't seem so good at first, but when I take the money out, I don't get taxed on at all. I still have $150 to buy my same hat. So from a conceptual standpoint as to which is better, a Roth or a traditional, if all things are equal, then they're both equal. However, different people have different needs. And some people will want to have money in a traditional IRA because of the fact that it doesn't make sense to take on the tax burden now. Let's say that I am in a very high tax bracket right now. And if I am in a high tax bracket, then a lot of times it would make sense to do something in a traditional IRA or a traditional 401k if you're investing that way, because the same argument can apply towards Roth 401ks and traditional 401ks. And then when I retire, if I'm planning on being in a lower tax bracket, I'll take the money out at a lower tax bracket, and it would make more sense to use a traditional IRA. If I feel that tax rates in America are going to be higher at the time that I become 60, then I think it would make more sense to be in a Roth IRA, because I'll put money in at let's say you're in the 27% tax bracket now, and let's say that the federal government raises taxes and you're in a 40% tax bracket when you retire. well, then you're in a Roth IRA, so that means that money is pretty much bulletproof from taxes. Now, keep in mind, all of this can change. There's always fear about them starting to tax Roth IRAs, and there's always a lot of things going on with it. But the point that I want to make for today is that I feel that for most people, both the Roth and the traditional have a place in your portfolio. If you don't qualify for a Roth IRA, meaning you make too much money, which is very possible, then there's alternatives. You have the Roth 401k, perhaps at your work. A lot of life insurance policies can be set up as Roth IRA lookalikes. I do that for some of my clients. There's other ways with which you can go with it. But my point is that I think that having a little bit of both makes the most sense for a lot of people in retirement. So with that being said, that is one to grow on for today, folks.
I believe the Viceroy actually had one last question for you there, Uncle Mike.
It's not a question. It's just an interesting observation. State of Illinois, the state that two of us live in, maybe St. Charles is in Illinois with the weather, currently doesn't tax.
It's its own principality, sir. I'm not sure.
Yes, its own principality. Currently doesn't tax, quote unquote, taxable pension withdrawals. It doesn't tax the IRA. So if you take $10,000 taxable out of an IRA over 59 and a half, the state of Illinois currently doesn't tax that. Now, I know as soon as I've said that, some of you are saying, yeah, how long is that going to last before that law changes? And to Mike's point, that's one of the things you should consider, because really when you're making this decision, you're forecasting the future earnings rate and the future tax rate. And almost everyone I've ever spoken to as a client or in this industry assumes tax rates are going to go up.
Excellent point. Something to certainly consider when you're planning out those distributions down the road a little bit. Who'd have known we actually have some income that Illinois doesn't sink its claws into? I'm definitely on the side of the fence that won't be around for long. So maybe get while the getting's good, as they say. Meanwhile, it's time for us to get right on into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. Like the name implies, this is the portion of the program where we break down what we're watching for the rest of this week. It was a bit of a quiet week, at least a quiet session, I should say, today, so not a lot lighting it up today. Some stuff to keep an eye on for the rest of this week. Crude continues to be a little bit volatile. Of course, that's pretty much a given day out there in crude land. It's rally-ho, it's rally-ho. Oh, it's sell-off time, it's sell-off time. So we'll, of course, continue to pay attention to that. In terms of earnings, not a heck of a lot on the earnings front that really is of particular merit. I think one of the few that probably our listeners may be interested in trading, or at least have interest in towards the end of the week, is on Friday. We have good old BlackBerry. They're one of those names, are they gone? Are they back again? Do they have I think they relaunched recently some old school style handsets to try to play to that physical keyboard crowd. So we'll see if that's of interest. Of course, Lululemon, that's a big one for the OX crowd. That one's on Thursday, so that one, of course, will be interesting. COSI, that name is really an option into itself, so not really a lot of options plays on COSI at this point, and not many others. GameStop, Carnival. But really, we're kind of winding down on the earnings front. Aside from earnings, Uncle Mike, perhaps we'll start with you if you're not done talking already after all that strategizing. What else are you watching for the rest of this week, sir?
2120 on the S&P. I'm really laser focused on that. I think we're at very key levels right now. I think that we established those highs about a month ago in late February. We pulled back from it a bit, but we really need to break through that number if we want to continue and have a nice rally for 2015. I think that it's very important, and I would be very cautious until we make the new all-time highs at this point. But once we make them, I think it's going to be we're going to have a nice year. But we got to make them first.
And if you don't, you just keep writing those calls, right?
It's that easy.
It's just free money, listeners. You heard it here first. All right. And Mr. Rock Lobster, what do you keep an eye on for the rest of this week, sir?
I don't know. I could swear something's got to work.
That's our title already for the episode. One of these has to work.
One of these has to work. I'm finding I guess it's not, I think a lot of short covering of the euro and unwinding of that currency trade. But I guess, is when the euro is stable and oil is stable, we seem to rally. It's just, they're still kind of bouncing around a lot. So those are really the only two things. There's not a whole lot of macro news. I think this is kind of one of those 2-week periods where there's not a whole lot of news coming, which makes the market could be volatile, but with the VIX trading 13 and change, it's not expecting a whole lot to happen either right now. So that's about, that's about as much as I can say for that. I think besides, the euro and oil kind of moving things around, it's pretty darn sleepy. I guess you got the Greeks could throw a monkey wrench in something, but other than that, we need a reason to rally, and right now I just don't think we have one. Corporate earnings are getting kind of smoked because of the dollar, so it's hard to, after 6 straight years of rally, maybe this is the year we sort of just go sideways. Possibly.
Watch out for those Greek communist monkey wrenches. They tend to really screw things up. I like it. All right, and last but not least, Mr. Viceroy, what do you keep an eye on for the rest of the week, sir, in addition to your fine hats and watches?
I think Andrew hit on it. I think the critical benchmark in the market right now is the euro. So watching the dollar euro, watching oil, keeping an eye on VIX. But I think Mike's point, I think if we take out any of these psychological levels, I mean, the market had just no follow through today. And, I don't know if that was the snow in Chicago, the snow in New York, or it just had no follow through. A lot of news, I think, is going to be generated from Europe over the next couple weeks, and not just the issue of the Greeks and the Germans. That's clearly turned into a pissing match. But the negative interest rates, I think a lot of German investors, a lot of the Norwegian investors are just going to be coming here. And that should continue to drive our rates down and potentially drive the dollar, give it more strength. So I think those are going to be the critical factors.
I love it. So many potential titles for this episode. One of these has to work. Greek monkey wrenches, the Norwegian impending palooza, many things to choose from when we're editing the show together. But unfortunately, that's all the time we have for the Around the Block segments. Also all the time we have for this episode of the good old OB. But before we go, as always, let me check in one more time around the horn with each of our contributors, see what they're cooking up that may interest you. We'll start backwards this time. Mr. Viceroy, what's coming down the pike in the land of options, express, education, and live events?
So our next live event is this Saturday. Jimmy Ruzan and his crew will be in the Big D, Dallas, Texas. This Wednesday, the 25th, Mike Zaremski is going to do new customer onboarding for futures, talk about what new customers need to understand about the platform from both the standpoint of trading and researching both futures and futures options. Also on the 25th, Nina's going to do collars in IRAs, and there's a little bit of a twist when you put a collar into an IRA. The 26th, Nina's going to do short puts. The 27th, she's going to do streaming charts. All the events are free, and just like the virtual account, just come to optionsexpress.com for education. Click on the free education tab.
All right, and speaking of education, the folks over there at the pit know a thing or two about that. Mr. Backlobster, what do you guys have coming down the pike that may interest our listeners?
Actually, I think the biggest thing is our Option Pit store is going to open. We've pretty much been a mentoring, and we have a chat room service. But our store is going to open because we have thousands of hours of content, a lot of subjects, volatility, trading, position management, stuff like that. But we are going to make it available kind of in one-off. So you'll be able to go in the store and say, hey, I want to spend $25. I want to learn about realized vol. And that will be the Mark and Andrew take on realized vol. And plus we'll have related things to that topic. So I think that's kind of what our customers have been asking for. and that's what we're putting together. So that will be the biggest thing we got coming. We also have another weekend webinar coming very soon.
You're going to have pit bucks? I can buy my pit bucks and go shopping in the store.
I'm sure we'll have something. Maybe we can have some exchangeable pit dollars for, Option Insider Radio Network dollars. You never know.
Hey, do it in the old school way. Get a box of upticks for $5.
An uptick box. I want a T-shirt that says, "Where's the uptick box?"
Yes. If you're not familiar with that one, listeners, you're probably better off. That's an old school joke. All right, let's get away from that one. Uncle Mike, bring us home, sir. What's coming down the pike in the land of RCM Wealth Advisor / alternatives?
If for some reason you have not made a decision on Roth IRA or IRA, feel free to give me a call at 312-212-3531 or send me an email at mtosaw@rcmfs.com. I'd be more than happy to expand upon what was discussed today in the strategy block.
There you go, listeners. I know more than a few of your counterparts have already taken Uncle Mike up on that very generous offer and are reaping the whirlwind as we speak. All that call right in and put right in and all the other fun stuff they do out there, paying for that protection. Lots of fun stuff. Give him a call, shoot him an email. I think he'd love to hear from you. Get while the getting's good before the rest of your listeners fill up those few remaining spots. And he's a busy guy. He doesn't have time to spend all of his days with the OX clientele, but he'll make exceptions every now and then. So shoot him an email, give him a call, and let's see what he can do for you. And on behalf of Uncle Mike and the Viceroy and the Rock Lobster, and indeed myself, who has nothing to offer except all of these great, fun, free programs, check them out. We know you love them, and we'll see you next time right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.